What's going on, everybody? My name is Reda, and today I wanted to explain options flow data and how to actually go about using it while you're trying to make money trading. So we are actually the only, A2Trade is actually the only website that offers this data for free. Other websites are charging, $100, $200 a month to actually access data like this. So what makes this data even worth that, right? How can some people charge $200 a month to access data like this? And why exactly is this data so expensive? Before we get into that, let me give you a brief explanation as to exactly what you're looking at here, right? So basically, this is a culmination of large and unusual options trades. So they're trades made by institutions, right, or somebody with big money. And what we're trying to do here is track the extensive options trades explicitly made by the institutions or large big money guys, right? So most people don't have $1.2 million sitting around to bet on Tesla calls. So the idea here is that we aggregate these large trades into a platform so we can watch them and see if there's anything useful. There's anything useful, right? So as a trader, the idea is to build a watch list or to build a set of profitable stocks that you're going to go after, right? So options volume is a representation of the overall volume surrounding a stock, and unusual options activity allows us to weed out the fluff and try to find setups within what are the most actively watched stocks or where the most money is sitting, right? So what we're looking at here, for the most part, is large trades made by institutions or people with big money, and we're trying to find similarities. So how exactly do you use this data? Well, this is simple. You are looking to see a couple people making the same exact bet, right? So you're looking to see a large amount of the same or unusual or supersized bet being made. If more than one institution or more than one person is making the same massive bet, then it's worth keeping an eye on that bet, right? So, for example, let me give you guys, I'll run you through the platform after I give a brief explanation as to what this is. So, for example, let's take a look at SPY, okay? I'm going to focus on SPY from 10:03, I'm sorry, we'll do SPY, these three consecutive SPY trades today. So you can see there haven't been any of the same strike plays on SPY today, except for these three right here, the 323 puts, although it's a different expiration date, yeah, but they've been the 323 puts, and they were a minute apart each other today at 10:48, 10:49, and 10:50. So let's take a look at SPY today, right? So today, SPY, I'm looking at the 15-minute chart here. I'll take a screenshot so I can make this a bit easier to run through. 10:30, right? So this is the time right here. We'll call it, I believe the time that, it was 10:48. So we'll say right around, I don't know, right here, right? We can say, so after this first red candle, right around this area is when that first bet was made. You can see 10:48, that's where you see that first bet, and you're watching, you're like, okay, all right, we see one, we see two, we see three, let me take a look and see what's going on with these SPY 323s. And let's say you look at it and you're like, okay, I like this setup. Look like SPY is ready to turn down after these four massive green candles. And you enter, you hear. So this would be your entry after you took a look there. So all the options flow did there was present the opportunity to enter. So you enter with the options flow, and then you simply leave, after maybe the first green candle. Let's say it went against you, you had a stop loss, you get stopped out. But in this case, you would exit around this area when it got to the 50 SMA and it bounced. So you could say this is your exit. So you took SPY all the way down from here to here, all because you saw this bet coming in, right? That's it. That's usually how you use options flow. It's not too difficult, right? So let me give you a brief explanation as to what you're looking at with the entire platform here on A2Trade. So at the top, we have these four boxes, and these are representing the bullish sentiment. So the sentiment for the day, the bullish or bearish sentiment is telling you that most bets being made are bullish, right? So it's comparing the sizes of the bet and whatnot, and it's telling you that most of the bets being made today are bullish. It's telling you that the actual put to call ratio, so the amount of puts in relation to the amount of calls, is about there is 70% of a put being taken for every single call, right? Just about. And then it's telling you there's been a total of 41,295 total puts taken versus 61,121 total calls, right? That's the main idea here. And then over here, you can always click this question mark. It'll explain everything. It'll explain everything to you. Let's say you have a question after the video or whatnot. But this is completely free to access. The link is going to be in the description. And let me go ahead and actually describe some of the filters too. So obviously these are showing you orders only above 200,000, orders only above $1 million, and actually all orders above $1 million, even if you're just on the all tab, it will be highlighted in gold. Now, the unusual bar is highlighted in blue, right? So all orders that are highlighted in blue are marked as unusual. Now, what does unusual mean? Unusual means orders less than 30 days from expiration and more than 10% out of the money, right? So that's what that's showing you. You can click this if you want to see only orders above 200,000, only orders above $1 million, only unusual orders, only orders where the contract prices, which is right here, is less than 50 cents. You want to see calls, or if you just want to see puts. So basically from left to right, we'll explain one of these here. So this user at 10 or this institution or big money trader or whatever at 12:39, you can see, which was not too long ago, about 21 minutes ago, took a bet for NEO for the $4 calls that expired at the end of this week, February 7th, right? The stock was at $4.07, and he bought 543 of these calls at 29 cents. This was a split order type. So what is a split order type and a block order type? A block is they bought all 1,800 of these calls in one push of a button. A split means they bought 550, you can see right here, in a couple pushes of a button. So let's say they did 10 lots of 55, right? Same thing here. So a split means it's a large order that's done as a bunch of little small tiny orders in order to try to and sneak it through so that monitors like ours don't pick it up. And a block is like, okay, we don't care. It's just we want all these contracts at this price, right? You can always click for the chart if you want to see, if you want to look at NEO and where it's at, right? But that's pretty much it. That's how you use options flow data. That was a quick rundown of the A2Trade platform. Again, it's completely free. We are also on the iOS and Android App Store. You can download the app in the description. If you have any more questions, feel free to comment, or you can just join our Discord room and I can answer your questions live in there. Or maybe the question mark can answer your questions. Besides that, this is